happy weekend, everybody. Welcome to the Currency Room. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and let's jump into it. In this session, we're going to be talking about the news of the week. We're going to take a look at all the currencies. We're going to score them all from +3 to -3, and that tells us where to hunt. We pair the strong against the weak. That's what we do.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's start off first with what happened in equities. So we did get another sell-off in equities. So we've had a couple weeks of weakness, and this weakness has now brought us back down to really our last major support. We're going to take a look at the S&P chart, and we're going to see we are hanging on by a thread. Any lower, and boy, we are having some real technical damage done to the equity markets. And what happened to the bonds and the dollar? Well, they just kept going higher. They just cranked higher and had a big surge on Friday when we got the U.S. employment report. Cryptos continue to sell off. They reversed the prior week's gains. But we're going to take a look at Bitcoin. Bitcoin held that 92,000 level quite nicely. The question is, what's the upside on it? It held support. We're going to have to wait and see until we get to the chart. Let's take a look at the economic reports last week. We had some CPIs out of Europe and Switzerland. So you can see the European German CPI came in a little hotter than expected, but take a look at that Swiss CPI, negative 0.1. The Swiss franc has been stubbornly strong. The Swiss National Bank has been very aggressive in cutting rates. Their inflation is negative, but yet their currency stays strong. That is telling you that it does not want to weaken, that people are still looking at the Swiss franc as a good currency for some safety. Next up, we got the US ISM PMI services. That was a great number. This is 2/3 of the economy. This is just a wonderful number, 54.1. JOLTS job openings, higher than expected. As you can see, the U.S. is really surprising, and we'll see when we get down to the payrolls report. The payrolls report was phenomenal as well. We got the CPI out of Australia was higher than expected. This is maybe saying that the RBA was correct in the fact that they are reluctant to cut rates, with the RBNZ cutting rates substantially. So we're seeing a little bit of a difference between Australia and New Zealand, and we'll take a look at the Aussie-Kiwi pairing. We'll see that the Aussie-Kiwi pairing is at a pretty high level because of this difference. Let's take a look first at Canadian employment. Canadian employment was stronger than expected, much stronger than expected. And then take a look at this U.S. number, way stronger than expected. So we received really strong data, especially from the U.S. this week. Every number was just a killer number. So what does that mean? It means that interest rates go up and the dollar goes up, and it means that the Fed is less likely to give any more rate cuts. Ankit, what did you think about this week's strong U.S. data?
I agree. I think the bond market is kind of telling us this ahead of this. We are seeing yields continue to rise, and and as the data came out, it was spot on with what the expectation was. So I think we are in this, as you call it, Goldilocks economy here. Everything is strong, and we have already seen the expectation. Remember, last year we had this expectation going to the first of the year that we're going to cut rates like 4 or 5. I mean, right now the expectation is diminishing quite a bit. So the data is there supporting it, and that's supporting the yields, and that's supporting the U.S. dollar. And we are also seeing the yields kind of go higher across the world as well. I mean, especially UK was the big news that the UK yields were rising, and it really affected the British pound. So yeah, I think we are in this environment where global yields are rising, and the economy is okay. So yeah, I think it's almost giving us a smooth sailing as far as the worries in the market goes. Now, on the other hand, we are seeing the equity markets are now reacting differently because the rising yields are now finally affecting the broader market. So I think that's something we're going to continue watching in the coming weeks.
Well, okay, you use the term the Goldilocks economy, and I agree with you that all the numbers that came in over the last couple months have been not too hot, not too cold, just right. These numbers, in my opinion, are a little bit too hot. And that's why we've seen the bond yields break out of last year's highs, really kind of threatening this equity market move, because as long as interest rates aren't too high, equities are very, very happy. But once they get a little bit too high, they start to struggle a little bit. And we can see that this week. The S&P was down 1.4%, the world market down 1.47%. Crypto had a big pullback, just basically erasing what happened last year. And the safer stuff, gold and oil, going higher. So those interest rates are starting to get a little bit too hot for the equity market. And you can see that we've come down now and bounced off this level 3 times. So we have bounced off this level 3 times, and we've got this this upper trend line that's sloping downward. This is not a great technical pattern for the market. Now, we cannot go aggressively bearish until we break below these lows, until we go in and make a lower low, bounce up, make a lower high, and then break. That's going to be the signal to get aggressively short in this market. We're not quite there yet, but we have all the makings of that pattern. Last week, I gave an odds that there was a 60% chance that we broke down, and a 40% chance that we broke to the upside. And then on Tuesday, I said I'm going to change that to 65-35, and now here I am. I think there's about a 70% chance that we do break. And if we do break, we probably go down to this next low of 5,700. That's 150 S&P points. So we're looking at about a 3% drop from here until the next support level. So for me, I am leaning bearish in equities for the first time, and I cannot remember how long, probably last July, and then we were only there very briefly. Let's take a look at what happened in the world of Forex. Look at that CAD. That CAD responded very nicely to that very strong employment report along with the USD. So we got the USD in Canada really leading the way here, and then everything else very, very flat. Aussie Kiwi still showing weakness, and the pound was the weakest currency. But this, to me, this Aussie Kiwi has been the story, and we've been talking about this for the last 2 to 3 months. Aussie Kiwi on the short side has been a great trade. We've been hitting it over and over and over again. The question has just been, what do we pair it up against? Do we pair it up against the dollar? Do we pair it against the pound, the euro? That's, I think, still the trade. I think the trade is still to be short Aussie and Kiwi and try to find what is being strong at the moment. Cryptos all fell down, but you can see Bitcoin, 3.5%. We will take a look at the Bitcoin chart, and we'll see that 92,000 point holding in. So let's go into all of our market analysis. Let's take a look at these bond yields, and this is what I was talking about. We have just broken out. 4.7 was last year's high, and you can see we have punched through that. Ankit, where do these interest rates go? Do we go all the way up to 5 again?
I think that's just the likely path over here. With that big break coming in, if the data keeps supporting, I think that's just going to continue rising. And again, take a look at, we are not really reversing. It's not like buy the rumor, sell the news. I mean, it's just holding on to those gains. So right now, again, I don't see an end in sight here. There's no reversal sign. We have consolidated, for some time, and then here we are breaking out. I think at this point, if you just go with the technicals, it looks like it wants to go higher. Eventually, we'll get to that ceiling at 5%, and maybe we'll see some pause there. We also have some inflation data coming out of the U.S. next week. And we'll see, if that changes any course of it. But right now, again, I think you want to be on the right side of this move here, which is higher yields.
And that is just screaming to stay long the dollar. I mean, I know we all are sick and tired of the dollar going higher, but it looks like that is likely the case. Here is the crypto basket, and you can see we pretty much have the same thing we held. So we're holding these support levels here. We held it this time. Eventually, though, we have to either break out or break down. I think, again, the same thing in crypto. I'm giving it a 65, 35, 70, 30 odds of breaking down. I do think we actually end up breaking down. If the equity markets break down, then the crypto markets likely break down along with it. Anka mentioned there is some inflation news out of the US, and there we go. It is on Tuesday and on Wednesday. So Tuesday we have CPI, and Wednesday we have PPI on Tuesday, and Wednesday we have CPI. This is going to be a big report for the dollar. We got all these hotter than expected numbers. We've got yields rising, we've got the dollar rising. If this number comes out and it's not hot, I think it can calm everything down a little bit. It's going to calm interest rates down. It's going to calm the dollar down, which means that the equities will likely be happy about that. If this number comes out hotter than expected, I'm afraid that the market is going to go from we're expecting rate cuts to we're expecting rate hikes. I think that's a real risk here. And if that happens, then the dollar and yields are going to continue to move higher because that's not priced in at the moment. What's priced in is we get one or two cuts this year. If this number comes out hot, I think it's a really bad thing for the economy. Well, sorry, for the stock market. The economy's a totally different story. But the stock market is not going to like that if these come out stronger than expected. Aussie unemployment report on Wednesday night as well. And then we get some pound stuff, GDP and retail sales. I think you can ignore the U.S. retail sales, but I think that pound GDP is going to be fairly important as well. So just make sure you're looking at the calendar, looking at the schedule. If you're trading any of those currencies, make sure that you understand when those reports are coming out. All right, let's go in and break everything down technically. I always love to get to this part because everything we just talked about was a lot of commentary, a lot of opinion. I will just say that, a lot of opinion. This is where we get into the charts, and there is no opinion whatsoever. So let's get into it. Bitcoin. Let's take a look at Bitcoin where it is. We had this little breakout up to that 108 level, but for the most part, we are trading in this range. The range is 92,000 up to about 102,000. This is the range. There is no reason to get aggressive at this point. If you want to be a range-bound trader, buy at the 92 area, sell at the 102. That's fine. That's fine. I think there's a range-bound trade case to be made here. I do not range-bound trade cryptos. I only trend trade them. So I'm only looking for a breakout to the upside, and it doesn't look like that is anytime soon. Because if it does break out, I'm not going to trust a breakout. I'm going to wait for a pullback, then I'll buy that pullback. That's the only time I'm going to buy it. So for me, crypto is definitely on the back burner for at least the next few weeks until it can break out and run. On a chart, Bitcoin still looks the best. We're still hanging out around that 50-day moving average. As you can see on Bitcoin Cash, we're pretty substantially below the 50-day moving average. That's telling me that relatively it's just not as strong as Bitcoin. Same thing here with Ethereum. It's just not hanging around the 50 like Bitcoin was. It's substantially below. It's telling me that this is relatively weak. I don't want to be buying the relatively weak cryptocurrency. I want to buy the strongest one. And then we come here and you can see Litecoin is actually hanging out near those moving averages. So I've been saying this for the last couple months. Bitcoin, number one, if you don't want to trade Bitcoin, Litecoin is actually looking like a better trade. But look, same thing here. We need to get a breakout. I think we're going to break down. But if we do break to the upside, I need a pullback, and I can buy that pullback. But that's it. So if I'm patient on that trade, I'm at least 2 weeks off. At least 2 weeks. So for me, crypto is on the back burner. All right, Ankas, take us through Forex.
Let's just start with the US dollar. Well, you can see that this thing, again, no change whatsoever. We were bullish last week, and we are now getting closer towards that resistance. And again, that's a key resistance on that currency basket. This, again, goes back to even 2020. Like, this is a strong resistance level. But if you just look at the chart, we are above the 20, above the 50. Everything is kind of moving up higher. So really, you want to be on the long side. Again, this is where I know we are at, some key levels, but again, no signs of reversals yet. You can see velocities there. Everything is just pointing out to the upside. Now, if you take a look at the yen, I must say that the yen is also doing well. And again, we talked about this last week. where I think yen is sort of in this unique opportunity where if the risk-off environment happens, meaning when equity markets are breaking down, we see that the yen comes out and does really well. I mean, today's a great example. We have the dollar strong, but yen is actually stronger than the dollar. So I think yen is acting as that safe haven currency, which again we haven't seen in the past few months, where we see sometime it acts as a safe haven currency, sometime it doesn't, and right now it is acting as a safe haven currency. So just keep in mind, as you're trading the yen, you're trading that market sentiment where if we are risk on, we see we see the yen pulls back, and we see a risk off, and then we see the yen goes higher. So I think that's tied up to the market sentiment. And then again, talking about that safe haven currency, Swiss franc, I must say, in the last few months, I mean, we actually see Swiss franc does as a nice safe haven currency, but again, look at the price action. It's no longer acting as a safe haven currency. Again, at the same time, it's not really breaking down either. So I think this is where Swiss franc, it is showing me relative weakness. So again, I think that if the equity markets rise, I think Swiss franc probably be a good shorting opportunity then. Until then, as long as market stays in this little environment where it's more risk off, where markets are selling off, I think yeah, Swiss franc likely to see on the sideline here. But yeah, I think this is showing me some signs. I'm looking to see if this develops and eventually break that support area. You can see that support area has been in place for the last 6 to 8 months. So something to keep in mind, as we take a look at these key levels to be broken. Now, on the other hand, if you take a look at the euro, you can see that, in a while, euro is actually holding a little better than the Swiss franc. So, it's something to keep a close eye on. I think if the euro did a good job at holding in, it hasn't really given up some of that, some of the levels yet, but overall, I think it's in a holding pattern. So again, comparatively, euro to Swiss franc, I actually would like Swiss franc short better based on that comparison. And then if you take a look at the British pound, now this one rolled over very nicely. Remember, when we went into this week, we talk about, hey, maybe we'll see a good test for these European currencies to hold or they roll over. This thing rolled over very nicely. And again, this has a lot to do with the UK yields that are rising higher. But right now, I think pound is under pressure here. So I do like pound on a further short.
And Ankit, let me jump in and just give you a pat on the back. Last week, I was talking about how, to me, this was the big question in the market. Were the European currencies going to bounce off this pullback? And you basically came out and said, no, I don't think they're going to bounce. I think they're going to sink. You nailed that call, so well done.
Oh, thank you. Well, yeah, so far things kind of worked out well as we discussed last week. Now, let's just take a look at CAD. And, looking at CAD, we talk about, even last week where CAD is no longer underperforming, diverging as much from the USD. So I think CAD, if you look at CAD's jobs numbers today, they were way better than expected. 90,000 job gains versus 20K, and, unemployment dropping lower. It seems like Canada and US are now kind of doing similar. Remember, there was a time where Canadian numbers were weaker and US numbers were stronger, and now it seems like both are kind of on par. So again, I think this is a great opportunity where CAD can easily play a catch up to the USD. So I do like CAD onto the upside. Again, we just tested resistance. I think in the next week, I'll be looking to play this more to the upside. You can see that velocity is up there, the trend score is picking up. So overall, I think that's moving in the right direction. Now, if you go into the other growth currencies like the Aussie, well, you can see that we got a support in place. We haven't broken out yet, but the trend remains weak, and you can see the velocity remains weak. And remember, this again goes down to two factors. Here we are strong, the dollar, and then we also have the weaker the market. So again, that's just a recipe for these currencies to underperform, and that's what we're seeing here. Both the Aussie and even the Kiwi, they haven't broken down the support yet, but they're all on the same path here. So nothing really changes. I think those are probably better shorts on those bear rallies.
Thanks, Ankit. And I got to say that, a lot of weeks we come in here and things aren't super clear, and we say, okay, well, I think these are where the markets are going to go. I think the markets are very clear here. It is long dollar, long CAD, long yen against Aussie and Kiwi. I just think that is the the trade out there that's telling you to be there. And if you take a look at it, the velocity is there right now too. So we got the trend scores, we got the velocity scores there. It's right there ready to go. And if equities break down even more next week, that is really going to push those trades even deeper. So the only risk I see to, like an Aussie dollar short or a Kiwi dollar short or something like that is if we get a big bounce in equities, then all of a sudden that trade doesn't look as good. But if we stay weak, that trade looks fantastic. So there is no question at all where I am hunting this week. I'm hunting all over Aussie Kiwi short and CAD. I actually like CAD number 1, yen number 2, and dollar number 3. Let's take a look at some of those. Whenever I have multiple currencies I want to figure out, I pair them up against each other. So let's pair up Aussie versus the Kiwi. Now we look at this daily chart and we say, okay, which one is stronger at the moment? And you can see they are both equally weak. The one is not showing any more strength or weakness than the other. We could go down into a 4-hour chart. At this moment, right here, right now, the Aussie is slightly weaker than the Kiwi. So I would go with Aussie first. So Aussie is going to be my number 1 short. And then on the long side, again, we had dollar against yen. We had dollar, yen, and the Canadian dollar. And again, the call on dollar yen it's been pretty flat the last couple of days. Right here, still pretty flat. So I'm going to give dollar and yen about the same. Let's take a look at CAD versus yen. And CAD is actually weakening a bit over the last, 24, 48 hours. So that tells me that I want to be in either dollar or yen. And so they're the same, so I think we can choose either one. So I'm going to pull up first. I'm going to pull up Aussie yen. Aussie yen is going to be where I'm going to start hunting. And here is our longer term chart here. And you can see that we've come up into this area. It looks like we're coming down to this 95.74 area. It looks like we're in between these ranges. So I think an easy target on this one is 95.70. So the only question is, where is the entry? We're getting all the selling stuff right now. Everything is telling us it's weakening. The big question is, where is the entry? We've got some support right at this point. So what I would love to do is I would love to take a short off of a bounce. I would love to see early next week a little bit of a bounce, maybe up into the 97.60 area. Love to take that for a short because it does look like this is going to continue heading lower. So Aussie yen I like quite a bit. Again, Aussie dollar should be very similar because the dollar and the yen were so similar. You can see on a technical basis, this thing has already broken down below its last low. So breaking down, again, these are both nice looking trades. You could absolutely go hunt for the Kiwi. I think probably this week, one day the Aussie is going to look a little bit better. One way the Kiwi is going to look a little bit better. But I think it's a no-brainer where the trade is. The last one I wanted to take a look at is Bitcoin. I've been pretty clear in this session that I'm not really looking to be bullish cryptos. I do think if you are a range-bound trader, I think there is a case that you can make to be a buyer on Bitcoin down at the 92,000 level. And you can see we had a nice bounce. We had a nice bounce here, and then we also had a really deep pullback that ended up bouncing there as well. I think if you are looking at that 92,000 area, anytime it gets down there, if you want to have a buy triggered ready, and then you've got a stop if it does break down, I think that's a very valid trade. It's not a trade I'm going to make. I don't range bound trade cryptos, but I think you could easily get bounces up into the high 90s, 97,000, 98,000, somewhere in there. I think these bounces can be pretty powerful, but you want to get them down here at the low. That's what I'm looking at. Ankit, what do you want to take a look at?
Hey, Rob. Well, yeah, I'm just looking at a few things here. I think the first, again, Aussie CAD, Kiwi CAD, I think those are in a breakdown. You can see that they are at some key levels that has broken down. And I think, if you look at the trend line, path of least resistance to the upside. So, those are good bear rally opportunities. Like I said, CAD, I think do stand a chance to catch up, play a little bit catch up to the USD. So I really like CAD long here. Same thing with the Kiwi CAD. We are at those levels we were last year, September. So you can see that if we, give up some those key levels, I think there could be a decent chance for a further breakdown. But remember, these are the ones that I really like if the equity market breaks down lower. Now, let's just say that if the market does bounce, I think Katz's Frank is the one that I'm looking at right now. If you take a look at where we are, again, not the best looking chart, but you can see that we did poke above that resistance here. And if it again stays above that resistance, I think it has a decent chance to rally a little bit higher. Again, we're going off that relative strength of weakness. I think if the market it recovers, so Swiss franc will likely to weaken a little bit further here. And I think that's where it can really play that catch up, because you can see for the longest time this is just going sideways. So this is again on the watch list for in a scenario where we see the markets recover. Now, if the market continues to deteriorate, I think the yen crosses would be a great short as well, like Aussie yen, even Kiwi yen, even pound yen, Rob. I like that one as well. I think if you look at them, they are really nicely rolling over. So as you're looking at next week, I think look at what the broader markets are doing. Look at those correlations. I think that's where the great next big opportunity would be.
I'm very happy that the markets are picking up some velocity, because I was telling everyone, hey, at the end of the year, don't worry. It gets way better at the first of the year. And then it didn't. That first week of the year, I was kind of looking around being like, oh, this kind of blows. Now we're starting to get really good price action. So last week I told you, hey, you know what? Maybe this is not the time to get super active. There is a lot going on. It is time to get super active as traders. So this is when we want to take advantage of it. When things are trending, we've got pretty much everything at +2, +3, or -2, -3. These are the moments as traders that there's pips out there to be had. So stay focused, make good trades, be disciplined, but this is a good market condition. Everyone have a great weekend. Goodbye, everyone.